Hello again people, time to have a look at some accruals and prepayments, this time focusing entirely on income accounts. Income accounts a bit like sales accounts and they have a relationship a little bit like a sales ledger control account as well. We'll discuss that later. We've got two little worksheets to do and some notes to come up. So our plasterers never worked before, so it's first year of working for themselves, so we're starting from scratch. Plasterers are good at plastering, not necessarily accounting, but what we can do is look at their bank account and look at the receipts. So by the end of the year, our plasterer had into his or her account £10,000. Our plasterer also knew that they were owed another 2,000 that they hadn't yet received, and they also knew that somebody had given them a deposit. They hadn't started the work, so of that 10,000, some of it is next year's earnings. So with that done, we can work out how much is going off to the statement of profit and loss, credit the statement of profit and loss, because it's income, it just isn't sales. But we haven't done the double entries into the accrued income account or the prepaid income account, so we better do those. So that's the double entry for the accrued income. And that's the deposit that we've got, or they've got. So if we now do the full works, we've done the carry downs, and we better do the brought downs. So we brought down and carried down the balance, and now we'll transfer them, we'll reverse them into next year's, year two's plastering income. So that clears that, and of course that we'll do the double entry first. The reversal, and one credit entry, debit entry rather. So that's the reversal. So we've reversed both into next year's accounts, ready to start recording receipts in the bank, and then at the end of the year we'll know how much is owed either way, debtors and creditors, adjustments at the end of the year. So let's do a little bit more work on year. So this one has already got the reversal in it, not to save a bit of time, but also to represent the way most AAC questions are appearing at the moment. And what's actually happened, that £600 is probably given to you. It's accrued income, it's the reversal of the accrued income. So what actually happened is on the 31st of December 01, this is now rental income, not plastering, there was £600 owed to us, or owed to our client. And we got it carried down, brought down, and on the 1st of January, first day of the financial year, it got reversed. One credit entry, one debit entry. So that's the account showed outstanding rental income reversed into account, and it's a debit entry. So throughout the year then, we have some bank receipts. There's the bank receipts going in. And at the end of the year 2, so we've got outstanding rental accrued income 900. Well, we've earned it, it was during that year, so now I know 2. So that one credit entry. Get the years right. That's rental from year 2. Just giving it a different name to differentiate. That's the 900. One credit entry, one debit entry, and then reverse into the start of year 3. So don't always need to do all the bringing down and carrying down. We've got a balance brought down. Those will be subtotaled. Doesn't matter that we're getting big totals here, just what matters is of course that the two columns add up. So now year 3, accrued income, rental for year 3, there's a 900, so oops, that's better, brought down, this is the rental, jumping ahead there. That is a reversal. So let's see. One credit, one debit. There's a 900 coming into year 3's income, so that when the money starts coming in, we'll just do this one. So at the end of the year, we've had £19,000. £900 of it was last year's money, and then £400 in advance. So actually of that £19,000, 400 is actually next year's. So we would have worked this one out. Tenants have caught up and gone normal, basically, payments in advance. So one debit entry, one credit entry. That's from year 3, and they have the use of our property, which is why it's a liability. We owe them the use of our property. And whilst we're at it, to the statement of profit and loss, the balancing figure. or balanced off. Credit statement and profit and loss, it's an income in the profit or loss account. So there aren't many other variations on the theme. There's only reversals, there's only accrued income or prepaid income. So let's have a look at what that will mean to us. Well, first thing is just remember and identify what accounts are actually income accounts. It is a problem. Occasionally students have lost marks not realising they were dealing with an income account. So we've done rental income, we've done some plastering, quite often it's commission income or interest received is always received in advance as well. They're very like their income accounts, so they're very like the sales, but the difference is that sales is posted from the day books. But actually, had we lost them, as you'll see in the next unit, as in financial accounts prep, in the incomplete records, we could actually reconstruct our sales accounts from a sales ledger control account and our bank by working out what we owed and who owed us money at the start and the end of the year. Which is why it just follows that pattern. Having said that, the prepaid income doesn't really follow the sales ledger control account model. But the double entries for the bank are similar. Debit the bank, credit our income account, or credit the sales ledger control account. If we had to give a refund or give out a credit note, very similar in our income account to treating it like a sales ledger control account. So in terms of what's actually happening, well, our reversals, always the top line. We've got an opening accrued income, that means it's last year's money being received this year. Or we've got prepaid income, it's this year's money, we've already got the money in the bank account. Then there's the bank, debit the bank, credit the income account. The item that's going off to the statement of profit and loss doesn't have to be in the middle, sometimes it's down the bottom, as long as it's there. Then there's closing accrued income, that means we've earned some money, we just haven't got the money into our bank figure, so we're just adding it in, we've earned it, we're adding it to our sales total. And then this is like the deposit for our plasterer, closing prepaid income, we've been paid something in advance, or our rental being paid in advance by our tenants. So this rear side really is what we've actually earned. Some last year, some this year, some next year, adjusted for the fact that some of the money that we received during the year was last year's or next year's money. So effectively the adjustments. In our trial balance then, accrued income is a debit as per the sales ledger control account, the similarities carrying on, and prepaid income is a credit, much easier to understand really if you think about the rental one or the deposit that the plasterer made. We owe someone something or some work because they've paid us in advance, paid us some of our earnings in advance.